Hey, thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. We discuss what's impacting mortgage rates on a daily basis, and sometimes it can come from the economic calendar or a combination of that with headline news or geopolitical. But sometimes it gets even really confusing when the market sentiment changes and you get good news is now bad news and vice versa. So we try to get into giving an explanation of what's going on with the markets and try so that way you can hopefully better follow if you're out there looking at what rates are doing. A little bit about myself is I am a loan officer. I do work as a loan or work with a national lender, and we do loans in all 50 states. So if we can help you guys out with your next refinance or your purchase deal, please help us. Please reach out to us. We'd love to be able to talk to you on how we can help you guys. But more than that, we like to be a resource. So if we can answer any questions you guys might have, please feel free to reach out. We'd like to be able to, again, answer any questions you guys might have. Um, so without further ado, we'll jump right into it. Today's kind of the big day this week for we got the Bureau of Labor Statistics or BLS uh, jobs data, and so we'll start off the top one here. We got the average earnings month over month from May. So back in April, we had a 0.3% increase in average earnings. Forecast was supposed to be a little bit bigger at zero point 0.4. However, it came in pretty much the same pace at 0.3% in the month of May. Now here's the number we're kind of looking at, the non-farm payrolls for the month of May. April's was actually revised higher to 428 from 428,000 to 436,000. Forecast is kind of for a 325,000 for the month of May, and it came in a little bit hotter at 390,000. So this is kind of a decent number here. Not a great number, but it's kind of like that. Some people call it the Goldilocks. Some investors or economists are out there calling it Goldilocks, where it's not too cold, not too hot. It's still a pretty good number. Average work week in hours for the month of May remained the same. So we went from 34.6 hours to for same forecast 34.6, and it came in at 34.6. So work hours remained the same. Unemployment also remained on the same. So it went from at 3.6%. Forecast called for a slight downturn to 3.5, but it remained unchanged at 3.6. Last but not least, we'll look at the ISM non-manufactured PMI or the services. Uh, so anything above 50 is considered expansion. Anything below is contraction. The month of April is at 57.1. Forecast count for 56.4, and it came in below that at 55.9. So decent again. Jobs data was decent. However, the services industry is showing a little different tone here, and not looking as well as before. So let's take a look here at the mortgage-backed securities. On how mortgage rates are doing today. So we'll look at the here's where the jobs data came in. So we're up here. The jobs data came in. We dropped, but as soon as the ISM data kicked in, came in pretty good. So stocks are down today, all negative territory. They looked at the jobs data. They looked at all the data here. Uh, again, they didn't like the ISM data as much, but of course they did. They were content with the jobs data. There's a lot of people putting out there some negative vibes. A lot of CEOs like from Jamie Dimon and Chase Bank to more recently Elon Musk, basically saying he wants a reduction in workforce by 10%. So they're viewing an outlook of a negative view for the outlook. We got a number of other CEOs kind of stating the same thing, that they think there's going to be some uh, nastiness out there, a recession or stagflation coming up. Again, most likely, if we do, it'll probably be next year. We'll see it. We probably won't see it this year. If you're aware, we got the Feds are doing the rate hikes, but it takes a good 6 months until we absorb that into the economy. So we're not going to feel that immediately. It's going to be late this year we'll start feeling it, and it'll probably kick into next year when we'll really start feeling it a bit more. So that's pretty much where we're at now. Right now, today we're down about 19 basis points. We were down further as you saw with the daily, and we did pull back a little bit with the ISM data. But since then, we've been kind of getting a little more negative. We did improve up to like minus 11 not too long ago. Now we're down to minus 19. And if you look at the 10-year Treasury, we're at just under 2.96 right now for the day. And that's it. I mean, the, we'll look at lastly, we'll just look at the average rate for conforming limits here. And that is for 15-year is at 4.79%. And the 30-year is at 5.43%. So if you guys would like a rate quote, please reach out. We'd love to be able to help you guys out. If we can be of any assistance, again, feel free to reach out. Thank you so much for watching. If you guys like these videos, please help us out and share the videos. You guys have a great rest of your day. Enjoy your weekend. We'll look forward to you guys on Monday. Take care.